Currency Pro Part 2. 3 ways to invest in currencies. Now that you know the basics of how to read a currency chart, let's dive into the good stuff. How to invest in currencies. Now, let me say up front, there are a million kinds of complicated derivative products out there that you could use to invest in currencies. But I'm not going to cover those here because I think that as an individual investor, there's really not much advantage to using them, especially after factoring in the high dollar amounts required and their complexity. We will cover some of them in other parts of the course though, like when we get into how companies hedge their currency exposure, but I'm getting ahead of myself. For our purposes today, there are 3 ways to invest in a currency. Number 1, you can hold it. Number 2, you can invest in an asset that's based in the currency. Or number 3, you can buy an ETF that invests in the currency. The first way, just simply holding a currency, is basically never the best way to do it. Why? Because our second way, buying an asset that's based in that currency, is better. Currencies themselves don't pay any interest or generate any profits. Bonds or bank accounts pay interest. Stocks have a chance to make profits and go up. And when you invest in stocks or bonds or a bank account from a foreign country, you are also investing in the currency. You're giving yourself 2 ways to make money instead of 1. To illustrate how this works, let's say you buy $100 worth of stock in a fictional French company. We'll call it France Incorporated. That stock isn't really priced in dollars, it's priced in euros. So technically, you're converting your dollars into euros when you buy it. If the stock price doesn't change, but the euro appreciates by 10% against the dollar, your investment would then be worth $110. You would have made a 10% profit in dollar terms because of the currency appreciation, even though the stock price didn't change. If you want to invest in a currency, but you're not confident in the stock or bond market, or don't want to go through the trouble to choose a particular investment, you could also simply open a bank account in that country. Sure, it's not sexy, and you probably won't make much, but you'll eliminate any kind of investment-related fluctuation and just get exposure to the currency, plus any interest the bank account pays. The third way to invest in currencies, and my preferred way, if you want to get direct currency exposure, will be through an ETF. I especially prefer leveraged ETFs if they're available, because most currencies don't generally move around that much in value, and if I just want a 5% return, there are much less risky ways to get it than investing in foreign currencies. In August 2023, I put out a short video about why I was buying a 2x Japanese yen ETF. That might be worth watching for a real life example. In my next video, I'll talk about what drives currencies and how to determine if they're attractive investments. And by the way, this is a 10-part course that's gonna roll out over 5 weeks on YouTube. But if you want access to all 10 parts right now without clicking around YouTube or watching ads, check out the link below. Thanks for watching.